Howdy everybody, I'm Raymond Dahlman, President of DSA Financial Group, and welcome to the weekly economic update for May 3rd, 2021. I hope everyone had a fantastic weekend. It's pretty good here in Colorado. Had sun on Friday and Saturday, and temperatures up near 70. Yesterday turned cold, and there's currently snow in my front yard. So here's a picture of my driveway with the cars with some snow and some snow up on the hillside. So it's the one consistent thing that this is my 5th May here in Colorado, and the first week of May always seems to bring a snowstorm. But it looks like the weather will be clearing off later this week, and it'll be nice and sunny again. So, all right, well, let's go ahead and take a peek at this week's economic update. Last week's numbers were fairly flat. The Dow Jones was down 0.5%, while the S&P was up 0.02, so basically flat for the week. The NASDAQ was down 0.39, and international or overseas stocks rose a mere 0.18%. The S&P 500 and NASDAQ set some new highs. This was, partly due to strong quarterly reports and just the economy opening up more and more. Also, earnings expectations were better than expected. As of last week, a third of the S&P companies had reported. And let's see, coming in as of last Friday, 40% of the S&P index companies reported. Showed earnings per share growth, and now an estimated 29.3, well ahead, and 12.2% earnings per share growth had higher than the start of last year. So all in all, things appear to be okay. I don't want to get too excited about anything, because primarily we are replacing the jobs that were laid off last year. I know we hear a lot about job growth. To me, it's more of just replacements until we actually get back the 8 or 9 million more people that are still out of work. I'll just consider this, re-entering the workforce as opposed to job creation. As far as economic data this week, Tuesday we have factory orders. On Wednesday we have the ADP employment report and the Institute for Supply Management Index. On Thursday, jobless claims, and Friday, the employment situation report. Some of the major companies reporting earnings this week: we have CVS, Pfizer, Dominion, and Prudential tomorrow. Wednesday, PayPal, GM, Twilio, never heard of them, Etsy, and Cognizant Technologies. And Thursday, Square, Roku, Alomar, a couple more. And then Friday, we have Berkshire Hathaway, EOG Resources, Cigna, and DraftKings. Let's take a look again here with the indexes over the last week. Year to date, the Dow Jones is still leading as far as domestics. Or I'm sorry, actually the S&P 500 is leading as far as domestics. International's coming in as the laggard at 6.72. Sorry if I sound a little stuffy. The allergies have been a little bad here this week, so is what it is. As far as the Treasury notes, the yield is up 0.7% for the year, so it's gone from about 0.93 to 1.63 since January 1st. All right, well, let's take a look at some of the white papers I've sent out this week. The first one is titled "The Debate Starts on Capital Gains Taxes." We know that the Democrats and President Biden want to raise capital gains up to 39.6% for those, or from the 20% range for those who make more than $1 million a year. I just see that as having more of a trickle-down effect. More and more, if capital gains are taxed at a higher rate than they are currently, it's going to lead to more people having to pay tax and sell off more investments to get the same dollar amount back. But they do face pretty much an uphill battle. We'll see if legislators like Joe Manchin from West Virginia will jump on that. I personally don't think so, but it is something to keep an eye on. excuse me, investor sentiment is shifting. Is the second white paper I'm putting out this week. You know, they did some recent polls, and 63% of investors feel that protecting their financial assets is, you know, a high priority. Number one, pandemic worries. There's been a shift. You know, 2/3 of those surveyed believe that protecting, again, their assets is, you know, a high priority. Additionally, roughly 43% of those surveyed believe that shifts in priorities will last beyond the pandemic. We've had a market rally this year. You know, it is a little odd just because everything has really seemed to rise, like, you know, with the current tide. Probably the biggest concern or thing to watch is, what is the Fed going to do? Will they continue to keep interest rates at or near zero? I think that's just going to allow the asset bubble to continue to inflate, and when it pops, it's not going to be pretty. That's just my, you know, putting on my financial advisor hat and looking at the big picture. The longer this bubble continues to blow or to increase in size, will probably have a more devastating effect down the road. And then just staying the course. I think most people realize that over the long term, that is the best course of action to take with their portfolios. You know, making herky-jerky movements is oftentimes the worst thing you can do, especially if the market is extra volatile. You typically sell at the wrong time and buy at the worst possible time. All right, and the third white paper I'm putting out is 2021 Retirement Confidence Survey. Had some interesting tidbits in here. First one that is highlighted is that only 33% expect Social Security to be a significant source of income in retirement. In reality, it's about 62%. Next, about 50% of workers believe that workplace retirement plans will be a significant source of their retirement income. But as of the most recent survey, only about 20% was a major source. Let's see, another nugget. 26% of workers plan to work for pay in retirement, and the reality is that it's only about 7%. And let's see, I think that was about it there. So I think there is a no, there's not a hyperlink to the survey, but you could probably just Google search it and see the entire survey. All right, so that's everything I had as far as financial news, what's been going on. I do have some 2 podcasts that I do want to share. The first one is from the Free Man Behind the Wall podcast. It's episode 572, the World Economic Forum and the Great Reset, with Tom DiLorenzo. He's an economist who spent more than 20 years in academia as an economics professor. At the beginning of the podcast, he lists his credentials. Very smart man, someone that you know, I pay attention to. He also writes a lot for LouRockwell.com. It's a place where I share a lot of articles from. So I do want to go ahead and share or listen to part of this right now, and I would encourage anyone to listen to the entire podcast. It is certainly very interesting. So let's go ahead and take a minute and listen.
Even if there wasn't this World Economic Forum, this Great Reset, even if there weren't nefarious plans in place, just what was done over the last year as far as the economy goes. I mean, in your opinion, as an economist, how long would it take to get back to where we were in, say, January or February of 2020?
Well, it'll take years. It would normally take probably years, but they're not giving up. You know, everything Biden is doing is a hyper interventionist, and they're printing money like mad. The last year, the money supply increased by at least 24%. And they're trying to implement his so-called infrastructure bill. Has all these elements of the so-called Green New Deal, which is just Soviet-style central planning, hiding behind the facade of environmentalism. And so that'll do even more damage. So any recovery, you know, the Austrian economists always say that the bust part of a recession or depression is the good part, because that's when the businesses realize we've got to shape up. We've got to, we've overinvested here. We've made bad decisions there, but it's game time now. We have to tighten up the ship. We have to become more profitable. We have to cut costs where we should have cut costs earlier. And so when we normally come out of a recession, American businesses are typically stronger than they were when they went in. That's the bad part of the business cycle, the boom, because there's overinvestment and what we call malinvestment, bad investment that's taking place because it's fake profitability. And then when the bubble bursts, that's when you find out it was fake. It's not a profitable business venture after all. But that's
all right. I'll go ahead and stop that there. Again, it's a very interesting listen. It's about 47 minutes. Listen at 1.5 speed, probably knock that out in less than a half hour. Definitely a good listen. Tom has some very good insights on what's going on right now, and also has a wealth of knowledge from his time as a professor. So, all right. The last one I had is the part 2 of Merica Does Mengele. This is from the Dangerous History podcast. The part 1 was talking about a lot of the experiments that were done through the Tuskegee experiments, and how a lot of people, or most of the test subjects, were unaware that they were part of a medical trials, essentially. Part 2 has to do with the CIA's involvement with MK Ultra and the drugging of unsuspecting people with LSD to see what the effects were on people here, on the people that they tested it on, in hopes of using it for interrogation treatments and such. So let's go ahead and take a few minutes and listen to Professor CJ talk. This is part of the intro as he's getting into the podcast.
That said, I stand behind the overall meat of the episode. Though I will say, in light of a few things that I have learned since I made this episode back in 2014, I would change my take on a few particular aspects of this story. Specifically, I would definitely have a somewhat different take on the story of Frank Olson, the U.S. Army chemist whose death I talk about in this episode. In fact, I think I actually opened the episode by talking a little bit about how he died. And if you've seen the Netflix miniseries Wormwood, which is all about the death of Frank Olson and the subsequent story of his family and his son in particular to try and find out the truth, if you've seen this miniseries, and if you haven't, I highly recommend you go watch it, then you'll know what I'm talking about as far as it looks like the death of Frank Olson very likely might have been something more dark and sinister than just an LSD experiment gone awry. As terrible as that might be, the idea that somebody was experimentally dosed with LSD and committed suicide because of it, that's terrible enough. But the information that's revealed in Wormwood, as well as in a few other places, that either didn't exist or that I was unaware of, sources back when I was making this episode. In light of those revelations, the death of Frank Olson might be something even more sinister than just an LSD experiment gone awry.
All right, we'll go ahead and stop that there. A good listen. I think it's probably it's about 50 minutes. So again, not a terribly long episode to listen through. This is only going to be up for a short time. This is from his subscription service. So, but this is up for free for a bit. So, kind of interesting to see what our government does to us behind the scenes, and makes you wonder what's happening today. So, all right. Well, that's everything I had as far as financial news and some economic perspective, as well as a little entertainment for you that's historically based. If anyone has any questions, concerns, or comments, feel free to reach out to me via email or give me a call. Be sure to like, subscribe, and share this with some friends and family. I'm sure they could get something out of it. And if not, they can at least subscribe to the newsletter and be up to date on what's going on in the world. So hope everyone has a fantastic week. Talk to everyone on Friday. Take care. Bye-bye.